Hi, welcome to the Market Alert for Thursday, 21st of March 2019. So, what will the first day of spring bring us market-wise? Well, certainly interesting yesterday. We'll just start off with a few of the headlines. May announced yesterday to the Commons she was seeking a delay to triggering Article 50 until the 30th of June. This hasn't gone down very well at all. And the effect on the pound, this is the daily chart. You can see that prices move lower. They're still above the 20 bar moving average there, but on an intraday basis, the market was already below the three averages when we started yesterday. So short for sure, as far as the short-term trend is concerned, or the intraday. So prices move lower. We get a 76% retracement here. The market bounces a bit. So if we just go off the high there to here and then just move this across, you'll see that the market stops at the 76% and then below the averages, and then we sail south. And this is when the announcement was made. Got PMQs and the market moved lower. However, it did recover later on, but this was only due to the fact that we had the FOMC meeting in the US. Rates were left unchanged. This is the first time, as I said, I think from December 2015, where rates have not been raised during a live quarterly meeting. So again, we see the retracement here. And then the news was bad for the dollar because the currency likes to see a higher interest rate. It's good for the currency, and prices rallied, and obviously straight up to the 200 bar moving average, and then prices retracing once again. But you can see these 76% retracements. And then overnight, the pound remains sideways, sitting on the DP level, the daily pivot at the moment, which is a positive. And we're just at the resistance level here, so we'll see what happens. News today, the only one that's worth looking at here is the EU summit. This is at 10:15, so May is off to Brussels once more. And what else have we got? We've got the MPC today as well, of course, but nothing's going to change there. So Bank of England interest rates, you can see there that 9 to keep the rate unchanged. And the rate is 0.75, and to remain unchanged as well. There's no way they can increase interest rates. The interest on the UK debt is accruing at £5,000 per second. So it's going to be very difficult to actually see any increase in interest rates unless, of course, there is rampant inflation. And inflation is one thing that they want to try and get out of the debt. But, of course, that has the adverse effect of increasing costs, and then there hasn't been the wage rises to match the inflation we've already had over the last 10 years. So the whole thing is a bit of a mess. And speaking of a mess, the Dow Jones, you can see the market trading up to the 76% of 26,090. Just going to delete this one. And we have a problem, Houston. If we go to zero hedge, we can see that Powell throws in the towel on growth and inflation, sees no more rate hikes in 2019. And also this article here, a very good article, recession secured, bonds and bullion bid as Fed folds sparks a dollar dump. And the reason I say it's not looking well is because this market has been inflated on interest rates being lower, or being low for so long, and also of course the printing of money. That's the main thing. And now that interest rates can't go up, it says that actually it's not, the economy isn't as strong as we thought it was, and therefore we can't increase interest rates anymore. So the only thing that's going to actually send the market higher, if we look at the reaction during the meeting, you can see here that the market rallied strongly to begin with. No rate rise, and we've not had any rate rises until from 2008 to December 2015. and the market was in one of the strongest bull markets. That was because of the amount of money that they printed, 3 billion or 4 billion. Sorry, I'll rephrase that. I'll get it right. It was $4.1 trillion dollars on the Fed's balance sheet, and now they've got to get this off there as well. They can't increase interest rates, and they can't really start printing any money until they've offloaded some of the balance sheet. So they're now between a rock and a hard place, and as ever, as with all central banks' policy, they end up screwing up in the end. They have absolutely no idea how it works, but this has all been artificially inflated for the last 10 years. We know this. I mean, you have to look at the weekly chart, and in particular the monthly chart, and you can see there from 2009, March 2009, this market has just been pumped to the upside there, and you can see now we've got it hasn't made any sort of major progress. It's now churning on these highs in the monthly chart. So without they redrop interest rates or start printing again, we are looking very, very negative as far as this market's concerned. At the moment, unless they can come up with some other magic formula to send the markets back to the upside. So the weakness, definitely, you can see some selling for yesterday. You may get the odd bounce or whatever. What I'd be keen to look at now is on the downside, certainly from the low of the test bar to Monday's high. Watch for the market in this area here. If it takes out here, it's going to retest the 200 bar moving average. Once the 200 bar moving average is broken, if it does, then expect prices to move lower. And yep, that's what I will be looking for. Also just noticed here, if we come off this high down to the test low as well, we're at 76% here as well. So you can see we've got a major issue if prices start to move higher at these two levels as well. So keep an eye on those. So what with Brexit, no more printing of money at this time, or stopping of raising rates, which says that the growth isn't there. And also, as I've said many times in the market alert, there is a definite global slowdown as well. So all of these things combined, it's starting to look rather ominous. Doesn't mean to say that the market can't go higher, but at the moment, without they start printing money or reducing rates, it's going to struggle to move to the upside there. And then finally in Bitcoin, nothing to report here, but I thought we'd just have a quick look. The only positive is that we have got rising lows throughout this week. The market is actually showing some sort of mild bullishness there with these higher lows. Nobody's bid lower than the previous day's low. Okay, that will do for this one. A bit longer than normal, but a lot of interesting things going on. Let's see how May gets on. We've got carnage down in Parliament, so the pound's doing very well, actually. I am surprised that it's holding up as well as it is, but then the Remainers are getting their wish at the moment, and the European elite, so that will keep the currency strong at this time. If we end up coming out without a deal, which is very, very unlikely, particularly after the vote on the motion last week to remove a no deal off the table. But who knows with the whole thing. So yeah, the pound, watch for the 76% retracement, and this one in particular. As in fact, let me just redraw this one. I know I'd finished, but I've just spotted something there. So from the high of this bar to yesterday's low, and just draw that one across there. So watch the 133.24 level if prices do move to the upside, if they offer a further extension, so longer than June. But of course that creates all sorts of problems with the MEP elections and whatever. Anyway, I will conclude, and like I say, the same for the Dow, reasons I gave earlier. So let's see what happens today. Should be an interesting one. And with that, as ever, thanks for watching. See you in the next one.